Yo, what is going on, guys? Lottery Stocks here. Real quick, if you could please smash a like on this video. We are trying to get to 5K subs on this channel, and it helps the algorithm get the YouTube video out to people who don't actually watch. Also, guys, 70% of people are actually not subscribed to the channel that view the channel. Now, without further ado, let's get right into the video. Guys, I've drawn something out. Now, take with it what you will, but keep up with me on this and watch till the end, okay? We are taking a look at ticker symbol AMC, AMC Entertainment, AMC Theaters, whatever you want to go by it. Okay, we are taking a look at the short, okay, the short interest, the cost to borrow, things like that. Okay, we want to start this video off, okay, by saying average shorts got in at $9. Now, the average shorts actually got in between $2 and $9, but we're going to be conservative for this video and say they got in at $9. That way they are less negative, and we're going to be conservative and just use conservative numbers around this, all right? Now, we're also going to say that the average short got in with 100,000 shares at $9. That is going to give you $900,000, okay? This is their position, their initial investment in the stock, all right? Now, if you take the cost to borrow, which is 1.2%, again, being conservative, it's actually a bit higher than that, and it's continuing to rise, okay? If you don't know what cost to borrow is, it's when you borrow a stock, you have a fee. That's why people say holding this for us is not doing anything, but this is charging them, right? Cost to borrow fee. So 1.2%. Okay. Usually this fee is on an annual rate. I don't know what it is for AMC, annual or monthly, but if you take the cost to borrow out of their initial investment, that is $10,800 a month. Okay. So 10.8K a month, or you're going to be looking at 130K a year or 10.8K a year. Either way, if this cost to borrow is yearly, you're looking at 10.8K a year, which is really a slap on the wrist for them. And if it's monthly, you're looking at 130K a year. Okay, that's a bit more of a hit. Now, AMC at $16, shorts would be net negative 720,000. This is what would be owed to buy back shares, all right? That is AMC at $16. That is the 80% increase, well, decrease for them from $9 to $16 for the stock. Now, if you take a look at the IWM and AMC on November 8th, 2021, this is what I kind of wanted to bring up, okay? If I bring up this chart right here, you're going to see November 8th is when IWM peaked, okay? 244.46. Now, it's right in this time zone. I kind of want to point this out, right? I think it's a bit interesting, okay? You go to the 8th as well on AMC. Now, negative beta was really a thing up until this point and kind of kicked in, right? They both peaked, right? AMC peaked at $46. I just find it interesting that IWM peaked and started selling off very, very harshly. I find it to be that shorts were in a bit of trouble ever since the market started dying out. Because as you guys can see, other than this, we've been on a consistent uptrend in the IWM. And I'm just looking at this as an overall market perspective, not using the SPY, because this is actually what tracks AMC. This is what AMC is stuffed in, okay? So this is a bit interesting, right? The sell-off could have caused these shorts to be a bit underwater, and you could have seen this naked shorting start taking place right after November 8th, okay? After November 8th at $46, you've seen us start selling off consistently from there on out. But if you go over to this, you're going to see that AMC at $46 would leave the shorts net owing $3.7 million, okay? Just over $3.7 million. This is not a good spot to be in, especially on one position, especially being a conservative number of 100,000 shares, especially being a conservative number at $9, and especially being a conservative number at cost to borrow 1.2%. Because quite frankly, I think this is a bit higher, and it's manipulated to be shown to us a bit lower. And the reason I think it's a bit higher is because utilization is at 100%, and apparently retail has owned 90% of the float since June. So this is a very, very dangerous stock, in my opinion, to borrow against. But if you see slight uptrends consistently, you should see this cost to borrow rate rise if utilization stays at 100%. I just wanted to bring this theory out to you guys because it was pretty interesting, right? You see the IWM on a consistent uptrend. Let me pull this up right here. Consistent uptrend for about a long time, okay? As long as I can remember. And you don't see this type of negative beta kick in at any other point, or this positive beta kick in at any other point up until this period, okay? This is really what happens. You have negative beta. This is AMC stock. There's no sugarcoating it, right? It was being burned to the ground by shorts. And you don't see that negative beta really start happening, or you don't see positive beta really start happening until that day, right? November 8th, when shorts were deeply underwater, over 3.7, almost 4 million, being a very conservative number on that day. So ultimately, guys, that is what I got for this video. Tune in for tonight's price prediction on AMC. I love you all, guys. Lottery Stocks out.